What is going on, you guys, and welcome back to the channel. It's been officially now a month. It's been actually beyond a month, to be honest, since making this major portfolio change, a major strategy change of mine, where I've gone from individual stocks to entirely a passive index ETF investing portfolio. And I wanted to come give basically a 1 month update, a very candid and relaxed and honest thoughts or updates on how things have been. My goal is, of course, over the coming months and years to provide, more of a longer term update. But this is kind of just like a, first month in, what's it been like? There's been actually some major psychological benefits that I'm seeing already that I want to share in this video. We'll get into that. Here's how the portfolio is looking as of this morning. We have about 60% in VOO, that's the Vanguard S&P 500 ETF, 30%, about a third of the account in ZEQT, which is the BMO All Equity ETF. This has more than just the S&P concentration. It has exposure to Canada, some international markets, even things like the emerging and even small and mid cap markets as well. And then we have about 10%, a small amount in ZSP. And that's just a little bit clunkiness on my end. Just a bit of my TFSA, which has been obviously tracked in on Blossom. You can essentially ignore that. And I guess how things have shaped up is that the vast majority of my portfolio, as you can see, is exposed to the S&P 500. And I think that's great. That is, as I always say, is like the core, the staple. In my opinion, if you're choosing between the TSX and the S&P, that's a no-brainer. You want the S&P. But I am very cognizant that I don't know if I want all my exposure to be to the S&P. And not that there's anything wrong with that. I did get some questions. It's a very common question, is like, should I just be going for, VFV or VOO or an all-in-one ETF? And in my personal opinion, you're going to do well with both. Like statistically, if you're an S&P investor, you will experience, or you have experienced, great returns over a long period of time. I would expect very similar out of a more diversified product. But one thing that I do consider is, like, as of recently, the S&P has been performing very well. And the Mag 7 stocks have just propped up this index. And I think what a lot of investors tend to do is, like, as normal, as very common, is kind of like a recency bias kind of thing, and say, well, why would I not just want to be 100% exposed to the S&P? And why would I even deploy money into, other areas which are maybe performing less, for example, the Canadian market? I get that logic, but I do also understand that, just because the S&P is doing well now, there will be periods of time where the S&P underperforms. And especially when you look at the returns that this index has generated and understanding how it really has come from, these few major players, there is a very realistic world where, the opposite is true. Maybe the S&P underperforms. Not maybe, at some point it will. And that's where it's my belief that having a more diversified approach is the way to go, right? And one thing that I do consider personally, as I talked about in my last video, is that when I'm adding money into my account here, I add money in Canadian dollars, right? So the fund that I'm going to be purchasing, that I plan to purchase, is buying more of the ZEQT, the Canadian listed product, to avoid any currency conversions. I'd encourage you to watch my previous video, I think it was, where I dove deeper into that. And I had, I had a lot of US dollars in the account, hence why I bought VOO. It worked well in the RSP, yada, yada. But long story short is that I expect my ZEQT weighting to increase over time. And that's something I'm totally okay with, something I'm totally aiming for. I like that. Next to discuss, making the switch to Wealthsimple has been awesome. 2 thumbs up, again, as expected. It's been everything that I've expected and needed, so nothing to talk about there. But really, why I wanted to put this video together was I just returned, 2 days ago from my first trip to Europe. So that was obviously a great vacation. Me and my wife went out to attend one of our high school friends' weddings, which was this amazing wedding, like probably the most beautiful wedding I've ever been to and probably will go to. They had like a big castle and everything in Italy. So we had an amazing time there. We also did spend a bit of time in Paris, and Paris was, like, in my opinion, not the best. Yeah, I thought Paris was a bit of a dump. Italy was really cool in its own way. The food was good. Had some really delicious pastas and pizzas. One of the places I think had like the best pasta I've ever had, but I did get kind of sick of the food after a while. It's quite repetitive over there. Maybe it's just the stuff I was picking, but I did tend to find it being pretty pasta and pizza heavy, certainly pretty carb heavy compared to the diets that maybe we'd have here. The reason I talk about all that was A, to give you guys a quick update, but B, the entire time I was traveling and on vacation, I didn't once have to think about my investments. And I didn't once have that looming thought of monitoring what I was doing, stressing, so to speak, about certain holdings. It was completely a non-factor. And importantly, because I had set up auto investments with Wealthsimple, which I do have. I have money going in recurring on a weekly basis, buying these ETFs. I never stopped investing that entire time. When you think back to these discussions that Mark and I have had over the past few months about making this change, this vacation right here, like, summed it up for me. And it was such a reality check, like it just hit home as to why this strategy is fitting my life so good right now. There's a part of me that does feel sad, like a missing piece, kind of like a FOMO, if you will. I don't know if FOMO is the right term, but missing everything that went into, picking the individual stocks. But when weighing that with what my priorities are at the moment, it just solidified how this passive approach is the perfect approach for me at the moment. I don't believe I asked this in the previous video, but I'm so curious for our viewers, has there been any of you that have made this change that I've just recently undergone and noticed the contrasting difference? I know I got a few people on my Instagram who were saying that they did this and it was the exact same feelings that I was feeling. Like, you hear about the passive nature of investing, and a huge benefit is this out of sight, out of mind kind of automated approach. And when you have the time and the energy and the care to go out and do this, you kind of just overlook that. You don't really put much value or weight on it. But when it is a priority to you, and now that, experiencing both sides, I can tell you guys, and I want to share with you, it's a really relieving feeling to just know things are automated. And when I say automated, I guess let me just speak on that for a second. I've always automated the process of saving, right? So whether that's a pre-authorized contribution or putting money in to the account on a regular basis. Actually, what I typically used to do in the past number of years is I'd often make more of these lump sum contributions into my portfolio. So let's say the new year ticks over and I have new space. I'd put the money in and I'd have kind of a big chunk of cash and I'd, choose when to deploy that. And again, that takes more active management to decide, when, where, what investments, yada, yada, yada. With Wealthsimple in particular, one of the major reasons why I wanted to go with this platform is because they allow not only auto contributions, but actually auto investments, as you can see up on the screen. And to just have that going automatically, it's taking that kind of pay yourself first mentality and, just forcing those savings and completely it being passive. It's a huge kind of weight off the shoulders. Again, just being on vacation and knowing I'm actually deploying my capital into my investments and not really having to worry about it. So really, that's mainly what I wanted to talk about in this video. Just a quick video showcasing the psychological benefits that this strategy has been providing me over the past month. Obviously, it's so early to talk about returns and whatnot. I believe the account's up, but over the short term, you guys know this makes no difference to me. The account could be down 5%, 10%, and it's more so just how the markets are performing over a long period of time. I would expect it to move in the direction I want it. So that's not really a major concern to me, but just the peace of mind aspect, I'll share with you guys. It feels pretty darn good. But other than that, it feels good to be back in the studio, back in the command center here. And excited to film some more content. It was definitely a nice little break. The few weeks that I was, out of town, for some reason, the Wi-Fi, the connection in Italy was super poor. So I got a lot less work done than I was hoping to. But I typically do just the Roam like home thing where you pay $15 a day and you get all your typical, cellular coverages. It was super bad. And then all the places we ended up staying had really spotty Wi-Fi too. And I wasn't sure if that was just our experience or if that's a known thing. Europe was interesting. It was a blast. It was very expensive trip, in my opinion, between the food and getting around and renting a car. It ended up being a lot more costly than I would have liked. And maybe I'm just comparing to my previous trips to Asia, where I've been to, a variety of places in Asia and things are very cheap. I actually tend to like the food a lot better there, but that's just a personal preference. But yeah, it does feel good to be back. And I actually had a question for those sticking around to just wrap up this short, quick video. What type of content are you guys interested in seeing going forward? I have a couple videos that I'm working on now. One that was highly requested about investing for your kids. So talking about in trust for accounts, RESPs, yada, yada, yada. I have another video, which is slipping my mind right now, but yeah, leave a comment down below with what type of content you guys want to see. Follow me on Instagram if you guys want to DM me some suggestions. That's honestly a lot easier as well. And I'm a lot more responsive on there. But overall, that is the quick update video. Sharing my thoughts 1 month in. I'd love to hear what you guys think down below. Let me know, drop a thumbs up. Of course, follow me on Blossom. But as always, I thank you guys for watching. I hope you enjoyed, and I'll see you in the next video.